Hello. The company being analyzed today is ALPEX Solar Limited. This is the company which manufactures solar pumps. As you can see, solar pumps. Solar pumps are like water pumps, but are powered by electricity generated from solar panels. In addition to solar pumps, the main thing it manufactures is solar modules. As you can see, many pictures, these are solar modules plus solar pumps. So today we're going to analyze Alpec Solar's financials, what the company actually does, its future growth outlooks, etc. So let's start. First, we have market cap. The company is worth 2,939 crores. Current price of one share is 1,201 rupees. Book value, which is assets minus liabilities. So book value per share is 88.4. The return on equity is a really nice 47.7%. Return on capital employed is again an extremely nice 50.5%, and price to earnings ratio is 23.5. Return on equity, return on capital employed, if these numbers from screener.com are to be believed, because they can sometimes be wrong, really nice numbers, return on equity, return on capital employed. Next, we come to profit and loss. Here we have sales, operating profit margin, pay attention to this percentage, profit before tax, and finally, net profit from 2020 all the way to 2025. Now, in 2020, company had sales of 98 crores. Then in 2025, the company, look at this, massive surge to 780 crores worth of sales. See, massive jump from 2024, 413 crores. Massive jump from 2023, 195 crores of sales. So 780 crores of sales plus 126 crores of operating profit plus 112 crores of profit before tax and 83 crores. You can see this number 83, 83 crores of net profit. Let's take a look at them in percentage terms. So in last 5 years, the company has seen an explosive sales growth of 51%, compounded growth 51%. Last 3 years, 68% compounded sales growth. TTM is trailing 12 months or last 12 months, 89% sales growth. Profits even higher. Profits have outgrown sales growth. Last 5 years, 94% compounded profit growth. Last 3 years, 1,106% compounded sales growth. Then, return on equity has shown a steady increase. 5 years ago was already great 31%, 3 years ago 37, last year 48%. Great. Cash flows, so these are the company's cash flows. Pay attention to cash flow from operating activity. Very fluctuating. As you can see, 7 crores in 2020. We go all the way 2023, minus 7 crores 2024, minus 8 crores of cash flows, and March 2025 this year with a positive 69 crores. So not the best track record in terms of cash flows. Let's see how they will proceed from here. Again, cash flows are extremely important for a company, valuing a company. Now, what does the company actually do? Established in 2008, ALPEX Solar Limited is among North India's largest photovoltaic or solar, photovoltaic slash solar, same thing, module manufacturers. The modules are like the unit of a panel. So number of modules together makes a solar panel. Now, yes, 1.2 gigawatts. See this? 1.2 gigawatts of solar module manufacturing capacity it has right now. It has installed 21,000 solar pumps in total, and 98% of revenue comes from domestic industry. Then, very important, mega expansion plans. Remember that we talked about just few seconds ago, 1.2 gigawatts of solar module manufacturing. In the next 2 financial years, they're going to expand this to 3.6 gigawatts worth of solar module manufacturing. They're going to 3x their capacity in next 2 years. So massive growth. Along with that, they're going to have or they're going to establish a 1.6 gigawatts of solar cell manufacturing. I don't know if you can see this. Yeah, solar cell manufacturing. Now, solar cells are a component in manufacturing solar modules. This is backward integration for the company. Then 12,000 tons of aluminum frame per year. Aluminum frame is again component in modules. So yeah, it's targeting 100 megawatts of independent power production. In this case, IPP or independent power production. So this company is aiming to produce 100 megawatts of power, which it will sell to clients. Basically, it will make solar farms or solar panels, which will produce 100 megawatts, and they will sell this to clients, only power to clients. This IPP is a very profitable, very intensive. A lot of capital and money is required to finance IPP projects, but like EBITDA margin wise, it is very, very profitable. So, massive growth, 3.6 gigawatts, backward integration, which provides margin benefits to a company, and faster sales execution, and all of that, and IPP and all of that too. So, massive growth the company is aiming for. Then, most importantly, the brand ambassador is going to be Rahul Dravid. So already a multi-bagger stock. And less importantly, the company has won some order books, mainly some orders from customers. Importantly, 1,333 crores of orders from three leading manufacturers. In adding to this, they have gotten a 244 crores of orders from CMPDIL, 65 crores order from Hareda, 210 crores of contracts from SECI to supply high efficiency solar PV modules, and 45 crore orders from MSC DCL. So see, the current revenue was 700 something crores, and already it has orders worth 1,300 crores, orders worth 45 crores, 200 crores. And of course, reminder, Rahul Dravid, multi-bagger stock already. This is not financial advice. Moving on, let's take a look at this revenue segmentation. Where's the money actually coming from? So 94% of revenues in quarter one fiscal year 2026 came from selling solar modules. It is one of India's top 10 manufacturers of these modules. Okay, top 10. Then 5.9% of revenues came from solar pumps, selling solar pumps. The solar pumps is a lower thing, and modules is the higher thing. Moving on, clients. Who are the clients? We got BVG, Luminous, we got Tata Power, we got Indian Oil, we got Oswal, NTPC, and some massive, massive clients. As you can see, a bunch of notable clients. Then this expansion. How is the expansion going? So the first phase is already done, 1.2 gigawatts. Second phase is going to be done in fiscal year 2026. We are currently in fiscal year 2026. Capacity is going to double to 2.4 gigawatts. Then third phase is by fiscal year 2027. So the next fiscal year to now. 3.6 gigawatts. So another 1.2 gigawatts will be added in fiscal year 2027. You can imagine the type of revenue growth they're going for. And then these are the aluminum frames. Then, then this, the solar cell manufacturing. So 500 megawatts of solar cells worth of manufacturing will be done by end of current financial year. Sorry, the capacity, manufacturing capacity to make 500 megawatts worth of solar cells will be completed by the end of current financial year. Then by July 2026, another 500 megawatts will be made. Then by December 2026, another 600 megawatts worth of capacity will be made. Again, massive backward integration for the company. And finally, um, the IPP, yes. So selling of so this IPP projects. Again, this is basically making solar farms only, solar panels only. It is just they're selling all of this. They're just selling power. They don't sell power right now. Like they sell solar farms. They will sell modules. They will sell solar panels, but they won't sell just power to the clients. In this, they are just selling power. Okay. So 60 megawatts of this capacity will be done by fiscal year 2026, and fiscal year 2027, 100 megawatts will be reached. 60 megawatt this financial fiscal year, 40 megawatts that financial year, 2027. EPC, maybe not. We won't discuss this. I don't understand this right now. Then, this horrible handwriting, it's written by me. This is from the conference call. So the management, the yes, management of the company said this. Their guidance for revenue growth for fiscal year 2026 and 2027 is double, meaning they're looking to double their revenue, at least for fiscal year 2026 compared to fiscal year 2027. They want to double their revenue. And for fiscal year 2027, I'm not sure, but at least for fiscal year 2026 over fiscal year 2025, they want to double the revenue. So what was the revenue? Let's check it out. 780 crores. So they want this to reach around 1,560 crores of revenue. So that was it. That was ALPEX Solar. The company is going for massive, massive growth. Finally, one last thing I would like to show is this. In the profit and loss, take a look at interest on loans, and take a look at operating profit. When we divide operating profit by the interest, we get the interest coverage ratio. This investors would really like this to be above 1. That operating profit should be at least more than interest. So we will compare them. Interest is 1, 2, 3 lines below operating profit, the third line below operating profit. Let's compare this. Okay, cross fingers. So for 126 crores of operating profit in fiscal year 2025, they only had 8 crores of interest, which is 40x, 40 times interest coverage ratio, almost 40 times interest coverage ratio. That is very healthy. So it seems that the company in the near time won't have any troubles paying down payments or interest payments on debt. So that is it. Bye. One more thing, if you're wondering, what do you mean by EPC and what do you mean by IPP? EPC means the full form is engineering, procurement, and construction. For example, a company, what does it do? It manufactures these. Okay. So I'm just taking an example. So Alpex Solar, for example, will make these solar modules. Let's choose this one. It will make the solar module for a client. It will engineer this solar module. It will get the material. It will construct the solar module, and it will then give it away to the client. The client now owns it. What happens under IPP? Under IPP, they will make the thing. They will make the solar module, but then they will own the solar module and they will sell the power generated from solar modules to the client. Now, the important differentiation here is EPC. Under EPC, it's a less capital intensive because see, you don't have to own it. Like you don't need to own it. The client pays entire thing. So yes, it is the less capital intensive, but it has less EBITDA margins. It is a less profitable segment. While IPP is the more capital intensive and the more EBITDA margin, the more profitable thing, but more money is required to fund IPP projects. So that is it. 2x revenue growth. So they will double revenue in fiscal year 26. That's what I understood. That is it. Bye.